and welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And US President Trump's renewed tariff threats against European allies have revived talk of the Sell America trade. European countries are the United States' biggest creditor, owing $8 trillion worth of equities and bonds, almost twice as much as the rest of the world combined, this according to Deutsche Bank. The EU has condemned the tariff threats as blackmail, with France proposing economic countermeasures such as its anti-coercion instrument, which could limit US access to public tenders, investments or banking activity, or restrict trade in services. The IMF has revised its 2026 global growth forecast as business and economies adapt to US tariffs that have eased in recent months, and a continued AI investment boom that has fueled asset wealth and expectations of productivity gains. In its World Economic Outlook update, it's forecast global GDP growth of 3.3% in 2026, the IMF estimating US growth for the year at 2.4%. China's growth is estimated to reach 4.5%, down from 5% it just reported for 2025. And Australia's 2026 growth is forecast at 2.1%, while the IMF has raised concerns about stubbornly high inflation and urged the Reserve Bank to take a cautious approach to setting interest rates. The US Treasury physical market was closed overnight, but futures implied that the 10-year yield rose 2 basis points, while Australian 3-year government bond yields rose to 4.19%, the 10-year at 4.8%. And having a quick look at currency markets this morning on concerns that global investors could exit US assets in response to a US-EU trade war. We have seen weakness in the greenback, but clawing back a little in Asian trade, the Aussie dollar at 67.1 US cents. Let's get across the technicals. Mandy Rafsanjani from Trading Psychology joining me now to explain why patience is the antidote to the fear of missing out. The older I get, Mandy, the more I like joy of missing out, but tell us why we need patience if we're worried about FOMO.
Yes, absolutely. So FOMO shows up in many different ways. And today we are going to talk about FOMO that shows up after having had a really big profit. And I saw that a lot last year because the markets were so strong. So many traders made their first ever biggest profits. And then on the back of that, then the FOMO sets in. Like they want more of that. And all they can think of is the next big trade, like the next dopamine hit, right? So, it's been a big problem for quite a few of traders.
All right. Well, you've prepared a couple of examples. This one here, tell us what we're looking at and what triggered the FOMO.
Yeah, so if you look at the left chart, so two different traders, the biggest ones. On the left chart, you can see the trader nailed his entry, nailed the exit, and then immediately he felt, oh my God, there is another leg up, and he had the fear of missing out on that next leg up. Now, he was lucky because there was a sideways pattern, and that's a daily chart. So you can see it took quite a while for the next leg to eventuate, and that's on Ethereum. And he had, in his attempt to catch the next big trade, even though it wasn't his entries, he tried several times and then had a $190,000 loss. But then he nailed the second leg in the end anyway and came out really good at the end of the year. Now, the next trader, very different story. So he had a very fundamental bias on ASTS, where he has a long-term bullish view, and you can see the chart has been amazing. He caught the first leg up. And the moment he got out of this trade, immediately was this, oh my God, I'm going to miss the next trade leg. Look, after this retracement, it's going to do the next leg up. And then he was trying to catch a falling knife. And sadly for him, he didn't dare to take the next leg up and ended the year 150,000 instead of over 500,000. It was his biggest equity capital gains or profit ever in a year. So this year.
I love that knife. Let's not catch a falling knife. But if you say patience is the antidote here to FOMO, Mandy, it's easier said than done. How do you sort of put it into practice?
Yeah, absolutely. So when we look at FOMO, we want to, and FOMO and patience, we want to understand first why were they not patient. And patience is part of discipline. So patience is the not doing something, and discipline often is connected with want to do something. And but patience is really a subcategory for discipline. Now, when we look at what was going on for trader number 2, and also the first one, but not as extreme, The first loss that he took was coming out of euphoria and, Superman syndrome. And he was dreaming already about taking his family first class to holiday destination, and how he's going to quit his job, and all this living in the future. Now, when we start doing that, it's also about controlling and not being able to deal with uncertainty. So the first step is really learn to handle uncertainty. And this is not just for trading, it's like for everything in life. It's a really, really powerful skill to have. Now, we need to also understand that patience is a skill. It's not something that we were being born with, and we need to practice patience. And so when we say we practice patience, we actually practice dealing with uncertainty, because that's what patience is, like, when is it going to happen? And then we're trying to force things. Now, the second losing trade is usually the regret aversion, where the anchoring bias, where they had a loss, they had to give back profits, and then nothing below that profit that they ever made is good enough, right? So this trader, 500,000 profit, he had to give back some, and now the second loss was trying to make that loss back. The third entry then was out of fear. Oh my God, I need to make that money back. And so that is a very, very common pattern. That the first one's euphoria, the second one is want to make the loss back, and the third one is really fear of, oh my God, what have I done? Reality check.
Well, reality check, but tomorrow's always a new day, Mandy. So what do we take from that in terms of, if you have missed out, there's always another opportunity perhaps?
Yeah, absolutely. So this is how I look at the markets, and it helped me personally also, because yes, we do miss trades. Look at the tennis players, these amazing guys. They also miss games. They lose games. They maybe get kicked out of the Australian Open in the first round. But what we see, for example, in terms of FOMO in tennis, when the tennis player thinks, oh, this is going to be a cross-court play, and they ran across the court already, and then it's down the line, and then, they just look in astonishment, the ball passing by them. And how amazing is it, looking at these tennis players, how the ball comes at them so fast. They have to make a split-second decision to be at the right time where the ball is with their tennis racket. And so we traders, we have it so much easier. Believe in abundance. It sounds cheesy, I know, but really there's always, the market has been here for hundreds of years, and it will be here for another few hundred years, hopefully. So yeah, that really helps.
I'm looking forward to seeing those tennis players in action this weekend. Mandy, thanks so much. Mandy Rafsanjani from tradingpsychology.com.au. That does it for this edition of The Trade. Be sure to join us next time.